Welcome to Joel 3 here. Today I'm going to show you on how I got this trade on this gold setup. As you can see, yeah, on gold, yeah. So we're going to start by first clearing our chart like everything. After clearing, we are going to go in weekly time frame. Like in a weekly time frame, we look for where the market is reacting and how the market is moving. Since the market is moving bearish, so that means that we shall be looking for buy setups here. Like we shall be looking for buy setups. And that's a key level. We call this zone a key level, and this one we call it a break of structure. A break of structure. A break of structure. Then we can also see this zone here. This zone here. This zone here is a resistance zone. A resistance zone. So we call this zone. Here we can see liquidity. Yeah, good liquidity. Like you can also see good liquidity here. Okay, like good liquidity there. So that means this trade is like a good trade. Like this trade is a good. You can also see break of structure, liquidity, and a key level. That shows like it's strong. That's how you see this one spiked up. So yeah, and also what made me to buy gold is because of this zone. Yeah, weekly rejected a V classic level, or a weekly candle rejected a V classic level, which is a good impact in the market. It means a strong move. It means a strong move is coming in, and we call that zone a key level or V classic level. But let's put it to be a key level. After, we can now dive in. Like we can also now mark this zone. Like we can also mark this zone as our resistance. Yeah, yeah, as our resistance. Let's mark that zone as our resistance. Then we go to daily. Here in daily. Here in daily. Okay, let's first return this side. We cannot. Let's first return this side. We cannot see here in daily. Let's refine this zone. Refining this zone here. Yeah. Then after take it a bit in front. That's why I said taking good setups like this. Like you can also see here liquidity. But this is not the setup I took. This is not this is the setup that made me to be like to hope for good buys in the market. That move shows that gold was going to buy. Like it was going to buy massively. So you can see also there. And there was also liquidity. And what made me to be confident in this trade is that you can see also a market shift somewhere here. A market shift. A market shift here. A market shift there. Then also, for us to confirm that this thing is like a good one, you can also see liquidity, like liquidity here. Wow, this cool, like wow. You can also see liquidity. Liquidity over there. Yeah, making this zone very comfortable to buy from. It gave us also a break of structure here, like a break of structure somewhere here. You can also see there a break of structure, which is a good one. Then this our like resistant, or you can call it external range liquidity or buy side liquidity. Yeah, but let's put it to be resistant. So that was the nearest resistance I could aim. All of these, like these are now became a QML. Like these are now became like a QML. Where do we get this QML? And this was crazy. And if you check on this market, before everything, like a sweep was here before the market started giving us those moves. Before the market started giving us those moves. Let's put here to be a sweep. And also before we start talking like like before we carry on everything, let's first put this very well. before we carry out with everything, like before we carry out with everything, you can also see the zone, like you can also see the zone. Okay, we can remove this resistance here. You can also see the zone here, like a key level. This zone here is a key level. A key level that caused the cells, those massive cells you see. A key level that caused those massive cells. So that means the market tried dropping, like from here, the market tried dropping down, but it failed to break here, like it failed to break. That means that buyers are still in the market, like wow, like yeah, we are still cutting this. And also, before we go forward, there was a market shift here, not boosting your confidence. You need to get like crazy stuff. There was a market shift here. There was a market. Where do you find it? Like a market shift. So this made me like happy. Like yeah, this was the first market shift. It went up, gave us here a level, came and hit TP. Like for those sellers there, came and hit TP. Those who were holding got stopped out or got break evens. So the market went and gave us a new market shift somewhere here and gave us a break of structure. So where I got this trade from, like you can now see here, this was the one I was saying. Like I got this one from a weekly time frame. Like here, I got this one from a weekly time frame when it rejected, like a weekly candle rejected a V classic level. So this way I got it from. And if you go to daily, if you go to daily, like if you go to daily, you check on that. There was liquidity. There's liquidity here. There's liquidity, a lot of liquidity here. So I marked this one here. Or let's just take it up somewhere here. Okay, let's put our magnet. I marked this one here like external range liquidity or buy side liquidity. External, do we get this from? External range liquidity. Meaning that I was hoping for the market to sweep that zone, like to sweep it. So this is how I ended up getting my trade. If we go to H4 time frame, we shall see that this QML here was aligned with this zone. Like if you had refined it, you might have been, or you might miss it, or maybe yeah, like a miss. Okay, let's check on it. You see, a person who likes refining would have missed it, but since like me I had to leave it. Then this how now I got, after I was not trusting this zone. Why? If we go back to daily, I was not trusting this zone because of this. Like remember, there was a TS. We see a TS here. TS. You can see a TS over there. Then you can also see a V classic level here. Oh, an apex. Yeah, you can also see an apex here, or a V classic level. Let's make it a V classic level. And this is the reason as why I didn't take this trade over here on that QML. That is the reason as why I didn't take that trade. If we go to H4, you can see like the market came very well. Like the market came, it gave us a market shift from here. The market went up, giving us that external range liquidity, came back down, giving us good liquidity like inducement somewhere here, inducement, and went up, came back to this zone. So since there were two zones and liquidity was also here, like was packed there, I feared to enter on that zone. And also why? Because these weeks, like I didn't want to get weak because me, I don't like I don't like big stop losses. Yeah, that's why I didn't enter that trade. So I came in here, and there was also this V classic level over here. You can see also this V classic level. It was also making noise like, oh, pushing the market down, and the market came and tapped on the zone, giving us a good move. Like wow, giving us a good move up the upside. So I said, okay, since you're giving us a good move, so I go to see this zone here. Like it gave us equal liquidity, some sort of equal liquidity, if I'm not mistaken, equal liquidity. Like equal liquidity, that's how I call it, equal liquidity. Like then it came back, like after giving us equal liquidity. Before the equal liquidity, I said, what could this market, like what is it planning? So I got to know there was a QML here, like there was a QML. So I had to first go to a line chart, Then I saw the zone, like wow. I saw the zone here. I was like, where could this gold stuff buy from? Then after I went back. So I had to come back here. I got this zone here. Like this QML here. Over here. Although it was not like it was not that like showing, like it was not that valid, like too much valid. But I had reasons why I bought it. Cause gold rejected the weekly V classic level. So that means this now became a QML. And also why I took this trade, it was because liquidity. Liquidity over here. Wait a minute. You can also see liquidity over here. Liquidity over here. Liquidity over there. Then before we go forward, if we go to H1 time frame, we expect to get maybe a breakout structure there. Yeah. So when I entered H1, we got here. Wait a minute. Okay, yeah. H1 time frame. H1 time frame here, it gave us a market shift, which was good. Like this market shift over here. And also gave us some good sweep, like wow. Some good sweep over here. Some good sweep over here. Give us some good sweep over there. And also give us a breakout structure. Like that's why I was comfortable with this trade. Like, yeah, I'm supposed to take this trade from here. Although I didn't take the first one, but I was comfortable with this one because like it had almost everything. Like, wait, okay, let's put our magnet back. So here it gave us a breakout structure here, over here. Give us a breakout structure over there. Then liquidity, making this zone strong like crazy, like making this zone strong. And also the sweep here. Then I said, let's wait for this zone a bit. Then the market, you see, like the market went, gave us equal liquidity there, came back, boom, came back, entered our zone. So this way I entered my zone. And my stop loss always is around $3 only. But wait, because I don't have a lot to risk. Like I don't have a lot to risk. Once I get stop up, the day is done. Like, okay, let's check. You said I'm wrong. My stop loss always is $3. And getting my stop loss, I go to the higher time frame where I got the trade from. So $3. $3 somewhere there. Wait a minute. Wait. Like I haven't marked this KML very well. Like I didn't mark this KML very well. H4, come on. And those are the mistakes we make. Then be like, oh my god, like yeah, I hope you've learned from it. Like I haven't marked this KML very well. This KML was not marked very well. Yeah, that's the zone now. Oh, let's first go to H1. Like check on H1. Oh, and also let me tell you one thing. Like I wanted to refine this QML from here. I wanted to refine it to this zone here, over here. Yeah, I would have missed this trade, but since I was like, no, let me just leave it there, because it was from a H4 time frame, and this was like noise. This place here was like noise. I felt like refining it here to this OC level here, but I said no, let me just leave it. Yeah, that's why I left it there. Okay, let's go back to H4. As I said, my stop loss is always $3, like $3, and that's crazy, like bro. I know you won't believe me, but my stop loss always is $3 because I don't have a lot to risk. $3, and that's the stop loss. Check on it. I was almost getting stopped out. I was almost, sorry for that. I was almost getting stopped out. Even if you check on it, like I was almost getting stopped out. Like bro, that was crazy. And that's the reason why I took that trade. Breakout structure, a sweep, liquidity. You can see here breakout structure, a sweep, liquidity. Then now equal liquidity. Then it came back into the zone, like as the way I wanted. Boom. Then it gave us. So that my target was from this to that. Gave us that nice. Wow. Gave us that nice cool zone. Although I didn't target this zone, but the target was somewhere here, there. Like yeah, the target was somewhere there, and gave us that nice zone. Like wow. And I like the way they gave us. Like that was crazy. That was somewhat crazy. And I like the way it gave us. Everything was as good. Let's put this breakout structure very well. Okay. Breakout structure here. Okay, okay, yeah, like that's why you see that zone is, that is how I got the trade. And also let me show you something else. Like there's a trade I got in M15, like after the market hitting that zone. Let's go to M15 quickly. I got a sell from somewhere here, somewhere here. It was just like a continuation, but like from somewhere here, it was a sweep here, a sweep here. Wait, okay, I got myself from here, a sweep. Got myself from here, a sweep. Then also there was this, a classic level, a classic level. There was this, a classic level, a classic level. Then from here, you can also see here a market shift over here, which I couldn't lie about it. A market shift, a market shift over here. So before this price, like a market shift over there, then there was like a break of structure, some sort of a break of structure somewhere here. Yeah, a break of structure somewhere here. Yeah. So this thing boosted, like, wow, where should I get, like, I can't miss the sales. I was like crazy, like, where should I get the sales? Where should I get the sales? I never wanted to miss anything from here. So I came to this zone here. I came to this zone here. You can see here, support, like this support was broken here. So that means support becomes resistance. Yeah, support becomes resistance. Support becomes resistant. Oh, wait, not there. Okay, market first run this. Support becomes resistance. Like, yeah. Then the bad thing I did, like I was fearing to get stopped out, and this is the weirdest thing I did, like in life. Look at this. Remember, like after getting this break, the market came back a bit, gave us some liquidity over somewhere here. So I went to M5. I went to M5. So I went to M5 here. So I wanted to define this zone. Like where could this price, get to? Because I don't like bigger stop loss. So this is what happened, guys. Like this is what happened. I brought this zone over here. Over this. You see? Like I brought this zone over here. Meaning that it became now OCL level. Like OCL level. Now became an OCL level. So at first, the market first came, tapped on it. Like the market just came, tapped on it, went up a bit, came back, gave me a stop loss. And my stop loss, as I said, is always $3 there. Okay, let's check on this one. Okay, let's check on this one. $3. My stop loss is always $3. Oh, okay. I remember this trade. I was risking one, because I was not expecting this market. Like I was risking one, like one, like that, like one. I was risking one there. Yeah, I remember. I do remember this trade. Like I was risking $1 to make 25, if I'm not mistaken. Okay, let's wait. I will show you guys. Yeah. Okay. Then what? Like to make make my confidence become more strong, I got this Fibonacci circle here, this circle here, placed on this zone, brought it down, brought it to this level. Wait a minute. Wait that Fibonacci circle here. Then I brought it to this level over here. Like I brought it to this low. Let's make it somewhere big, like that. After bringing it to that low, I got now, what is this? Fifth circle. That's a fifth circle. Sorry guys. Like that's a fifth circle. So I brought this. What is this? Fib retracement. This one. So I place it from here. Come on, wait. Let's change it to Fib retracement. Yeah. Like from here to that high. From here to that high. Let's remove it. Then we just restart it. So from here to that high. Yeah, from there to that high. So meaning that my TP was somewhere here. My TP was somewhere here, and I got stopped out. Then before I got stopped out, there was a trade I was looking for. If I go to M15 here, there was a trade I was looking for. Like, there was a trade I was looking for, M15 here. I knew that the market was going to buy. So I came to this zone here, over here. Okay. I came to this zone over here. Let's change this to 50%. I came to this zone over here and I pulled it down until somewhere there. So I marked this zone like, this is not even how I marked it. It was not like that. Like, wait a bit. Got this, like, if I was to take this trade, because this was where the thing was aligning to, like here. If I was to mark this zone, like where this thing was, I would mark this OCL to take the trade. But I didn't want to take the trade from there. I wanted to make my own, like my own entry. So I came and I used this other block. I got the 50%. Got the 50% of it. Came over here, marked it. You can see, and this one became the 50%. And I didn't enter, like I didn't support this zone. Like I wasn't that interested on it. Then after, just picked my long position, place it somewhere here. As I said, my stop loss is always 3 or just here. Yeah, 3 there. Then I aimed this zone, like I was aiming now this zone, like, okay, if we could just remove these zones, yeah. If we could just remove these zones. Yeah, my aim was like, wait. Let's pick this retracement here. Target from here to this. Wait. Let's change it to retracement. The target was from here to this high, this high. Yeah. So the target, I was targeting this high, yeah? This high, yeah. See that? The thing just came back, entered the zone, gave us a clean move to the upside. And that was crazy, like, that was crazy. I was very happy about that, but I didn't take some trade. That zone there, I didn't take it, but I've understood something. If you get, like, why even I wanted to take that trade, it was because, but all of that happened at night. Even if you check the time, you can also see there, it was Wednesday at 2:30. Wait. Yeah, it was Wednesday at 2:15, and that was PM, and it was August, like Wednesday, 5th of August, 2026, 2:15 PM. You see, that trade went very well. And also, if I was to take the trade this way, the reason is why: one, there was liquidity. You can see there was liquidity over here, like liquidity over there. Then secondly, there was a breakout structure over here, like breakout structure, or even that breakout structure. Then now our key level, that we call it 50% or C.0 something. Yeah, and that's it. I would have taken that trade in a good way. So guys, thank you for watching the video, and thank you for everything. Yeah, share to your friends and like the video. At least give a like to me to support me in order for me to keep on dropping this. I know I'm still also developing, so if you want me to keep on pushing these videos, to bring out these videos, keep on like my videos in order to give me interest. Like this video, share to your friends. Subscribe to my channel. You know, I'm used to TikTok, but now you can subscribe to my channel here. Thank you so much. See you guys in the next video.